So, first up here, GM, the president of GM, was on CNBC here today, and he was speaking about EV trucks. They were speaking a lot about that, okay? Now, what he's saying is he's trying to definitely accelerate the truck business in regards to selling EV trucks, and they remain very committed to this. Now, I think this is very important because listening to kind of his tonality, it sounds like he's taking this extremely serious. I believe the reason he's taking this very serious is I think they're starting to see these Cybertrucks hit the road, and I think they realize the threat to their golden goose has arrived. If you don't know, Chevy pickup trucks are a huge profit generator for GM. I mean, a massive profit generator for GM. And for Ford, absolutely as well. And so if Cybertruck, let's call it the production keeps getting boosted up there, the demand is very high over the coming years, this is going to absolutely put an actual financial dent into companies like General Motors and into companies like Ford. And so this is why it's very important they try to fight Tesla off as much as they can. This is very interesting here. While Ford doesn't disclose model-level profit data, it is estimated that each F-150 earns the company an operating profit of around $10,000 and generates around 90% of Ford's global profits. In fact, the line of trucks is thought to be worth more than the entire company. So this goes to show you that for a company like Ford, right, it is going to, if Cybertruck becomes an actual threat, this is a monumental, existential crisis. Existential? Is that the word I'm looking for? You tell me in the comments, okay? This is a huge crisis for Ford if Cybertruck's actually going to be seriously successful out there, right? F-Series has the most to lose by far. F-Series, there's about 750,000 of those sold last year in the United States, right? Chevy Silverado was number 2, which gets into General Motors and why it's so important, why they're taking EV trucks, or trying to take EV trucks so serious, right? There's a debate if they're actually doing it or not, but at least they're pitching it as that. Chevy Silverado sold 555,000 units last year, right? And then you look at Ram, GMC, major units. Now, the issue in regards to Cybertruck is not just the amount of Cybertrucks that are going to be sold this year, in future years, things like that, okay? It's way bigger than that. Way bigger than that. Here's the real problem, okay? From specific trucks, Chevy can make a lot more money, Ford can make a lot more money. So for instance, Cybertruck, in my opinion, is really attacking the $55,000 and up trucks, okay? These are usually huge profit makers for GM, for Ford, right? So these are the trucks that they have to worry about. Like somebody going and saying, you know what, I want a Cybertruck instead of a Silverado 1500 crew cab, that's $65,000. Somebody says, you know what, I could get an F-150 Platinum that starts at $73,000, or I could get a Cybertruck. You know what, I think the Cybertruck's much cooler. I like that much more. I'm going to go ahead and get a Cybertruck, right? And if these are where Ford and GM make so much money, you look at the pricing of these, right? Look at this. This is in Vegas here, where I live, right? F-150 Lightning Platinum, dual E-motor, extended range battery. Look at the pricing on that. Supposedly they're taking $7,500 off, but I mean, my gosh, $86,000, almost $87,000. I mean, out the door, what are you looking at? $100,000 out the door after your taxes and all that stuff, get tacked on, and all the other crap they hit you with before you actually leave the dealership. I mean, you're looking at probably $100,000+. I think there's a lot of people that are saying, you know what, I could get that F-150 Lightning for, let's call it $100,000 out the door, but I could get a Cybertruck at 60 or 70 out the door, and I like a Cybertruck more, so I'm going to go ahead and get that, right? Look at this, F-250 Lariat here, $93,000. You think about the Raptor series. Raptor was the coolest truck in the world until Cybertruck arrived, right? And totally kind of zapped that away. And these trucks are sold for incredible amounts of money. I mean, usually it's $100K plus for those trucks. If there's even a 5%, if Cybertruck even puts a 5% dent in these sorts of vehicles in terms of how many are being sold, it's huge for the bottom line of Ford. It's huge for the bottom line of General Motors. And remember what Ford and General Motors companies run off of. It's about the bottom line. It's not about the revenue growth. It's not about the long-term EV opportunity and self-driving vehicles and, humanoid robots and AI and all these things that it is for Tesla. For these companies, it's profit. And so if their net income declines because they're not selling as many high-end trucks, right? That's a huge existential crisis for these companies in all seriousness. It's a huge problem. I mean, even if, because you got to understand, okay, there's 750,000 F-150s sold each year, right, roughly. There's a much smaller amount of the high end. Let's say maybe only 100,000 of those are high end. Well, what if 50,000, they sell 50,000 less of the high ends? That could matter to the bottom line by 10-20%, because that's where so much profit's made when they add on all those options and features and things like that, folks. So this is a huge deal. I understand why GM's big boss there, the president, is taking this very serious. And the next thing you got to ask yourself is, what if what Tesla's done to cars and especially SUVs, what if they start to take that sort of market share in trucks over time, right? We know they're the dominant EV player. What if Cybertruck's a much bigger problem than people realize? What if they're going to be able to, in a year from now, 18 months from now, what if they're going to be able to sell the Cybertruck for under $50,000? It's a real possibility that they could start selling Cybertrucks under $50,000 if they want to go there 12 to 18 months from now. What happens if that happens? Then we're talking about Tesla's going to start selling likely hundreds of thousands of Cybertrucks a year. There's a lot of construction going on around here, folks, okay? So, if you hear drills, saws, all type of things, there's a lot going on, okay? So, the moral of the story is Tesla's here. And I know this isn't an exciting year for Tesla, and, it's so depressing. Tesla, oh man, it's such a sad story, Get ready to get drilled. That's all I'm going to say about that. Next one up here. One of the most powerful themes this quarter is energy transition, super cycle. And by the way, also in regards to NVIDIA, right? Wait to see that software revenue over these coming, next 2 to 3 years. That's going to get a lot of people very excited.
Retail earnings will take center stage this week. Stephanie Link joins us now. She's Chief Investment Strategist, Portfolio Manager at Hightower Advisors, and a CNBC contributor. We're not done with earnings.
Oh, no,
obviously, Stephanie, we got Home Depot tomorrow, a couple other, Walmart, so retailers and the like. But there is an interesting piece, lead story in the Journal, a little bit different than.
So tomorrow, Home Depot, Alibaba. Wednesday, Cisco. Then Thursday, Walmart is up. Interesting.
I think your take, you liked the overall results, thought that things looked like they were up about 10%. The Journal.
There's 3 other companies that still have to report this earnings season that I'm looking really forward to. Obviously, NVIDIA's one. Second would be RH. Third, Nike.
Point out, though, if you disappointed, you really got hurt. And even if you exceeded expectations, you didn't get quite the bang for your buck you've gotten in previous quarters. To me, that sounds like multiples with perhaps no interest rate cuts. Multiples are going to have a hard time expanding further from where they are. If you beat expectations, you get a little bit of a bounce. But if you don't, then your stock goes down with the lower earnings and with the multiple staying where it is or going down.
Yeah, but I think if you don't have multiple expansion, but you still have earnings going higher, right, that actually will be, that'll be enough, Joe, I think. And I always call earnings season silly season. You know that, because you have these absurd reactions. Even if you miss, some stocks being down 10, 15, 20%, it gives you an opportunity for sure if you have conviction, obviously, in the idea. And if it doesn't go up that much, but they actually do beat, that also is an opportunity. Stocks follow profits on the way up and on the way down. So the names and the sectors that are seeing earnings revisions higher, obviously the stock should go higher over time.
Home Depot has been uncharacteristically, at least as far as the results, it hasn't been the stalwart that it's usually been in recent years. The stock, though, for a while had a really sharp comeback, even though the fundamentals didn't improve that much. I don't know what's happening now with the stock. Maybe it's inflationary expectations reemerged right about where that stock peaked, I think, and inflation doesn't help Home Depot usually.
Well, higher lumber prices will help, actually, Joe, for this quarter. Lumber prices are up about 13%. Home Depot, if you step back, they actually were a huge beneficiary during COVID. We were buying everything for our homes because that's where we were living, right, 24/7. So they benefited in COVID. And then you had that that post-COVID hangover, unfortunately, and you have had 5 negative quarters of same-store sales. I think you're coming to an end of the negative comps. I think you have easy comparisons. As I mentioned, you have a little bit higher commodity prices. They are focusing more on Pro. They just made that acquisition, SRS, and now Pro is going to be 50% of their total revenues as opposed to Lowe's, which is 25%. I think Pro is going to hold up better than do it yourself, and that's why I think the stock is poised to do better. But obviously, higher interest rates is the concern, and overall concerns about housing. I'm a bull on housing because I think we are 5 million homes short in this country, and if you talk to any of the home builders, they have underproduced for 14 straight years. It's cheaper for them to buy back their stock than to actually buy land. So to me, I think housing over the long haul is going to be very favorable. Maybe this year you have some ups and downs and some volatility, but I like the way to play it through Home Depot.
Such a flawed way of thinking. In regards to this home builders, right? Of course, all home builders are going to say we're underbuilt. Yeah, we need to build more. Every CEO in the world feels like their company's products are underserved and they're underbuilt and they need to build more. And there's going to have to be catch up here. And what do you think Tim Cook would say if you talk to him one-on-one? Oh, people haven't been upgrading their iPhones as much. A big super cycle's coming, right? I'm sure Elon will say the same thing about Tesla. I'm sure Amazon feels the same way about AWS and all their businesses if you were to talk to them, right? That's every CEO is going to feel like, oh, the market hasn't been buying enough of our product and service, but they're going to do that in the future, right? That's the name of the game. So I don't take any weight in what home builders say about their opinions on this and that.
I mean, comps aren't going to be, there's going to be another down quarter, right? Or this isn't where you think things are finally bottoming, but it's not going to be in this quarter where you see year-over-year gains, are you?
I don't think you're going to see that great of results, but I think it's not going to be negative. And if we look at Scott's Miracle-Gro, they reported, and the read-through there is they had record shipments to their retail partners. Home Depot is a 29% customer. So to me, I think this is also a seasonally strong time for the home improvement companies and the housing stocks, too. I mean, look at D.R. Horton. They had 55% order growth sequentially in their quarter. So I think, you're going to have puts and takes. It may not be a terrific quarter, but I think you're on your way to a nice recovery.
Maybe flat same-store sales or slightly higher, you think?
Yeah, kind of. I think flat to slightly higher. But I don't think negative. And I think after 5 straight quarters of negative comps, this will show a little bit of improvement, and then it should improve as we go through. Again, they have very easy comparisons throughout the year. So I think we should see a better setup.
I mean, normally
the stock's done nothing, by the way, Joe.
But that's what? It's come down. Yeah, we had the chart.
Yeah.
But
I mean, it's up 19% the past year. I wouldn't say it's done nothing.
The housing, I mean, it's tough right now, the supply and everything else. And this is a housing, it's kind of a proxy, but there are times it does better if people can't buy new houses. Like you can always make an excuse for why Home Depot is doing well or not doing well. Because if people aren't moving, then they're improving. And if housing is strong, then they're doing well for the professional builders. So we'll see what happens with that. You like some other ones? You like energy still?
Yeah, I do. I mean, I think one of the most powerful themes that I heard throughout the quarter that's starting to come to fruition is this energy transition kind of super cycle. And we've been talking about this for a really long time. We're going to spend about $4 trillion on anything that's tied to green, clean power, grid, data center, of course, also AI. And this past quarter, we actually started to see it. You guys were talking about utility stocks last week and how well they have done. Well, that's because earnings for utilities were up 30%. CapEx is actually going higher because of all of these initiatives. And then if you look at companies like Eaton, they had earnings up 27%. Quanta Services up 17%. GE Vernova, they had revenues up 24%. Their book-to-bill in electrification was 2.2 times. So we're starting to see all of this come together. together. And that's why I think it is really a powerful theme. I own all three of those names, and I would be buying any of them on weakness.
So you had the jobs number, which started to, we were the 10-year was sharply higher, so it started moving on that. Then you had the claims number, big surprise, higher. So there's, that helped the markets, that helped yields. We're starting to think you're seeing a slowdown, and then you come back with focusing on the Atlanta Fed at 4.2% growth. now you're telling me there's no slowdown in sight whatsoever. So which is it?
I don't know. I mean, it's not, I don't think we're going to grow GDP at 4.2% like the Atlanta Fed tracker is at now, but I do think that we're growing above trend. Is that 2.5%? Is it 2.5%, 3%? But the whole point being is we are running above trend. All of this fiscal and monetary policy stimulus that we put in place from COVID until now is actually doing its job. And I think that the better growth is the reason why we're seeing that last piece of inflation really challenged to come down. Right? We're going to get the core CPI this week. And it's going to be about 3.6%. Give or take a tenth or two or whatever the number is. We have made progress from 9.1% to, this 3 kind of area, but we're not going to get to 2 if we're growing above trend. And so to me, I'll take faster growth and a little bit higher inflation any day from an investment point of view, because that means earnings can actually continue to go higher.
Okay, so good point from her there, right? That's a good point. In regards to inflation running a little higher, growth running a little higher. Sure, yeah, you would want that, right? But the problem is if inflation's too high, then you also have issues, right? So, ideally, my opinion is, 2.5% GDP growth, 2.5%, CPI growth. I think that's kind of the perfect, magical numbers, in my personal opinion, on how the whole ship runs really smooth. But when you're talking about a CPI 3.5, now you're setting up the consumer to get hit too hard by inflation, right? There should always be inflation in the economy, but that level of inflation, there's limits. It's a fine balance. It's a very fine balance, right? Japan, they went through, decades of little to no inflation, and it's not ideal. Some people might look at that, but you kind of get into lost decades when that happens. And so inflation's good to have some in the system, but too much, and it leads you to likely a big crash at the end of the cycle, right? All right, next one up here, talking about inflation, okay?
Seem to be enjoying a Goldilocks macro environment and that a soft landing for the economy is at hand. For more on the markets, the economy, and much more, we want to bring in Roger Altman. He's the founder and senior chairman of Evercore. And Roger, we're very near all-time highs. Do you think the market deserves these valuations?
I do, because we're seeing evidence of the economy starting to slow. You see the first quarter growth was down a bit. Job growth was down a bit. Quits, vacancies a little weaker, average hourly earnings growth a little weaker.
I hate this, man. I don't like it when we try to spin growth slowing down as a positive thing. I understand we're trying to, slow the growth down because of inflation, but at the same time, I don't think it's necessarily a great thing. It's an uncomfortable feeling when things are deteriorating in the economy, which slowing growth, let's not fool ourselves. Just a nice way of saying the economy's deteriorating. That's all it is. It's a nice way of saying the economy's starting to deteriorate. And it's not as comforting a feeling like you're investing into an economy that's deteriorating versus, let's say, an economy that's getting better and improving, right? And so that's one thing I push back on with a lot of these folks. They talk about it and they're like, oh, it's so good. And I'm like, not great.
And that should pave the way for downticks on inflation, and then allow the Fed a little later to finally turn to ease. I personally think there'll be a rate cut in September. I don't know if there'll be more than that this year, but if I think the markets are responding to the positive, to the positivity of this slowing, the prospects for lower inflation, the prospects for monetary ease, and that's why both equities and the fixed income markets have rallied strongly.
I think the big question is how long that process takes for inflation to come down.
Right.
We're going to get other hints this week or other readings with PPI and CPI both out. If those numbers turn out to be hotter than expected, would you take your idea of a rate cut in September off the table?
Probably, because the Fed has to see proof that inflation is improving. And, we have a CPI number this week. Market expects, I think, 3.6% annualized rate, a little better than the last print. But if that were to go the other way, I think markets would react quite negatively because they would see that the prospects for a rate cut are now more distant.
Let's talk a little bit about tariffs, because this is the news this morning. The idea that Biden's looking at raising tariffs, which we knew was coming, for things like EVs and solar panels. I didn't realize that medical items would be on that list, too. And I didn't realize the number that's now being floated out there. Tariffs for EVs, something like 102%, which is significant. That's
So this is a frustrating thing. People think, there's still a lot of people that think Rona was the only thing that caused inflation. And I'm just here to tell people, it's delusional to think Rona was the only thing that caused inflation. This all started, in my opinion, it all started back with the tariffs. And when you enact a tariff, let's say, for instance, it's not like, it's going to show up in all the inflation data right away. It's over a period of time. It starts to show up more and more and more, right? As months tick on, quarters tick on, years tick on, it becomes a problem. So we already had started that with the whole tariff situation. Then Rona comes along, messes up supply chains. Then you get a next big lever, right? Then you have government spend like pure insanity, right? Stimulus checks, we know it all, the PPP loans, all that stuff, okay? We don't need to go over all that again. You pump massive amounts of money into the system, right? It's going to get spent out there, which is going to likely cause inflation, right? Let's say I live in Vegas. Let's say everybody in Vegas just got given $1 million today, okay? Guess what? Things are going to absolutely go crazy because everybody's going to be buying everything. A Lamborghini in Vegas is going to be selling for $10 million because everybody's going to want a Lamborghini in Vegas because they all got $1 million given to them, right? And so things boom for a little bit, cause massive inflation, then you have a bust cycle after that, right? And so it's very important you understand, this was multi-layers of how we got to this place. You didn't get CPI to go to 9% plus just by one thing. It was multiple things, and then the continued spending, right? And then the Fed acting slow. There's literally probably 5 or 6 reasons we got to that insane level of CPI. And by the way, if we measured things the way we used to measure them back in the 80s, right, and in the 70s, those CPI numbers would have been 15, 20%. 15, 20%, not 9%. They changed the methodology, obviously, many decades ago. I think it was 1983, if I recall. And that changed everything forever. But 9% is really like 15, 20%. That's why most people were like, dude, I'm paying like 15, 20, 30% more than I was paying a year ago. That's what people were saying in 2022, 2023, right? That was a reality. The government said 9%. So it was a multitude of reasons on how we got to this big inflationary problem. If you want to do more tariffs, okay, that might help out some things, but it's also an inflationary thing. You can't deny the fact that tariffs are inflationary.
Fold increase from where we stand right now at 25%. That has to be symbolic to some extent because even at 25%, you're not getting a lot of these cars into the market.
Well, I think what Biden is doing here, assuming that this rolls out as we expect, is trying to protect U.S. manufacturing, which he's obviously focused on reviving, and trying to protect the supply chain, especially as it relates to clean energy products. And also, China is falling back on an old, I would say, tired strategy, which is to heavily subsidize manufacturing, expand manufacturing production way beyond possible Chinese domestic consumption, and flood the United States and flood Europe with heavily subsidized exports. And when it comes to clean energy, where we need our own production, for example, solar panels, I think that's what Biden's trying to push back on.
And the reaction, you think, will be what? From the American manufacturers, from the markets?
Well, there's an ideological debate about tariffs. For example, Donald Trump wants to impose a 10% tariff on all imported goods. That's one of his cardinal approaches. And Trump was a tariff guy during his first term.
Yeah, he was.
So there's a big debate about, how helpful are tariffs really, because at the margin, they're inflationary. But we're in an era where we're trying to rebuild American manufacturing, and we're trying, for example, with semiconductors, to avoid the obvious Taiwan risk of being totally dependent on TSMC for advanced semiconductors. And you have to have steps like this if you really want to do that.
Roger, the first hot inflation number that we got in January, February, that was like an outlier, seasonal inventories, blah, blah, blah. Then we got another, were you surprised by what we saw? Or have you had this sort of, dovish view on inflation all along? And has your view been shaken? I'm just wondering, I'd like to believe you that we're going to see, cooler numbers for inflation, but that means that we've had like a series of outliers. And when does that become, when do you say I was wrong? Maybe inflation is headed back to 4%?
Well, first of all, I'm not certain, Joe. I mean, I could certainly be wrong.
Right, you said if we get a hot number on,
I could certainly be wrong.
Yeah.
But let's step back a minute. This inflation was caused, at least in my view, entirely by the pandemic. I think there's a lot of evidence on that. And so it's taking
that's open to discussion.
Okay, that wraps up this video, folks. I don't want to go any further before I lose my cool. Appreciate y'all joining me as always. Thanks so much for being here. Brand new workshop for you guys. Pin comment down there, 7 steps to 7 figures plus in stocks. That's a very informative 32-minute video. Goes very in depth on each of the stocks, some growth hacks, and how to implement these to kind of change your future. Much love and have a great day.